So I want to be respectful for your time. The intention of this, discussion, just to get more of your background. I mean, I know you and I talk about a lot of aspect of development, but I don't think we formally talked about uh, overall analysis of what you feel the market is. And when I look into it, there is so much changing. I mean, and I'm not referring only for AI. There is so much changing on the tenant, on the real estate transaction, on what would people looking for, even parameters that from 5 years probably is different now. So I'm curious to see from your side, what do you think is the biggest change you've seen? I mean, in our industry for the last 5 years, probably, or even 10 years.
Yeah, that's a tough question because one of my things I always say about our business is that everything's always changing, and that's the constant. Not to be cliche, but the tenant demands, competition, tenants needing to be, everything I do, 99% of what I do is focused on retail in the commercial real estate world. So when I say the tenants, it's restaurant tenants, retailers, just having to constantly evolve, whether that's their footprint, how do their drive-throughs work for different food brands and QSRs, speed to market. So it's all about keeping up with the current, you know, consumer demand and shifting patterns, and developers. And I would consider myself at this stage of my career a redeveloper, because most of what I do is buy existing and redevelop, but still being able to be really nimble, and have flexibility in what you can do. Because what worked for a particular user of real estate, two years ago, may not be even close to what works today. So you have to stay up on that demand and make sure you get into sites and deals where you have flexibility.
And pretty interesting. Like if you look at if you take one sector or one persona, QSR, for example, or a coffee shop or whatnot, do you say that they're all looking for the same thing, or they may be looking for complete different aspect other than demographic? Is their parameter very similar? Like when you're looking at placing someone on a site, what are the things you feel like similar or not? Because we see users coming in town every day, on sort of every week, new kind of like concepts, right?
Yeah, I think at the core, I think they're all looking for very similar aspects of the real estate, the demographics, population, traffic, accessibility to their consumer, to their customer. But each user of that real estate, and specifically, I think in QSR or fuel or convenience store, maybe they have different demands, like the timing of traffic, or the going to work side, or the coming home side, and where they want to be located. So there's boxes like that. If you're chasing a specific user, a coffee person's gonna almost always want to be on the going to work side of the street, close to a freeway, maybe, if they can. So each user has their own requirements, and one thing we've seen, in the last few years, that really was shaped during the COVID years, is that their criteria and demand for adequate drive-through stacking. And that's something that you can really get hung up on. I think a lot of people, maybe not burned is the right word, but a lot of people misstepped on projects coming out of that shift in demand, where they thought they had a site that could function and accommodate adequate stacking for a drive-through queue. And the tenants have realized they can't cut on that. Not only do they not want to cut on it because they want to be able to get those drive-through lines moving and service their consumer, the cities aren't falling for it anymore and are requiring massive stacks. So you better know, are you going through a lower volume Panera site, a tenant like that doesn't need massive stacking, or are you trying to accommodate a Chick-fil-A? And that's going to really shape, what you're looking for in the real estate.
So this to tag it along into this. I agree. Drive through been a challenge, obviously, and been challenged for municipal and for the end users. What other challenges you've seen happening today, like market? I mean, is it like what do you think is the biggest things that change, or the biggest challenge that developer or investor are having to go through in today market?
I think one of the biggest challenges, and one of the reasons why I moved more to existing redevelopment work, is time. The municipalities are getting so involved and so thoughtful in good and difficult ways about what they want to see for development parameters. Things have shifted in terms of speed, layering of new processes, but that time to market really hurts a developer. Time kills deals not only with the user but with your financials and your underwriting. So I think the length of time it's taken to get a project from conception to delivery to the tenant has really increased and is a major stress on what we do.
And this is the part I think, like I probably don't understand the most, is the financial part when you guys doing the performa. I'm always curious, like, how do you incorporate time in performa? Like, and you and I went through some performa and we've seen things, but I never seen a time factor to it. Like, you were making assumption that, okay, takes that long to get a permit, that much to take construction TI, but there is no kind of like hit on the numbers if it takes longer, right? Do you take those into consideration? Do you like do some analysis if the project drag 6 months? This is how much money is going to be affected, or this is how much like other than the market changing. What's do you put numbers on the delay, or this doesn't happen this way in this financial performance?
No, we for sure do, because every investor, whether it's an investor, a bank, an equity partner, you're going to look for those returns. And some investors are equity multiple driven, where it doesn't really necessarily take as much of the time into the equation. But a lot of investors, even if they are equity multiple driven, are still IRR conscious and want to see what time's going to do to their return as well. So it's for sure part of it, and it's realistic. We're very conservative. I've always been a very conservative underwriter. And so you just need to look at those timelines. You better have a current understanding of what city you're in and what they're running for permits. Talk to your consultants about how long this is going to take. Then you're going to buffer it a little bit of contingency time in there and hope you've made a well-educated guess. And that's the best you can do, right? But if you're going in thinking because you have an existing building, you're going to get right to a TI permit because it's a remodel, you're probably wrong. You're probably going to trigger a DRB, or you're going to trigger some other, time frame that maybe someone without the experience didn't anticipate. That 6 months can crush your IRR. In what we do, in a smaller deal where we're churning 6 to 24 month timelines, that can really impact you.
I for the IRR, you could start, especially on today market and when it comes to finance, you could start probably in a good IRR and you start drag 6 months or 9 months, and 12 months could change really quick on how tight the deal, at least from I hear from you guys, from developer and other end user, on how tight is the performa or for a project to pencil,
Yeah, it can change it drastically and quickly.
Yeah. So one things too, like, I mean, as far as demand, you mentioned the market change on demand. How do you think it changed when it comes to the type of users? Like, I mean, if you go back 5 years, 10 years, you've been involved in shopping center from huge anchors all the way to, like, I mean, single tenant. How do you see that the demand change? Is it like by different type of user, or is it different type of demand? I guess, like, from my business, I see tons of QSR everywhere, right? Was it the same, you think, 10 years ago, or this is a big shift that keep going? I'm just curious to see what you've seen from your side.
Yeah, so I guess I have shifted from all sorts of different size developments, and I think that the demand has changed for sure. I think retailers have had to figure out footprint size, and do they can they service their customer with a smaller footprint? Maybe we don't need as much of the big stores, and that shifts over time. So that starts to make a power center or a regional center look a little different. I think for the large part, the death of retail apocalypse hasn't happened like a lot of people thought it would. These retailers have adapted. They've learned to incorporate an online presence with the physical stores. We've proved, you touched on QSRs. We love to eat. High high quality food. It's been a really interesting shift in the QSR. You're seeing a lot of the older brands having to reinvent and keep up with the Shake Shacks and the Chick-fil-A's and the users that have come out and brought really quality product to the market, and that demand shifts there. So those other users haven't gone away for good, but maybe they've shrunk their store count, and really tightened up operations and tried to reinvent. So it's following the consumer. That's what a lot of people like. We're developing for our customers. Customer is what I've always said. It's whoever, you know, Burger King or Taco Bell or Chick-fil-A or a bank or a C store, whoever their customer is today, that's what they're figuring out. That has to translate into the type of real estate we're looking for to accommodate the tenant. So it's about the customers, our customer's customer.
You know, and it's funny when we go back at brick and mortar. I mean, you have all of these delivery app. You have all of the stuff. You could buy everything online. You could buy whatever. And you know, like 5 years ago, everyone talked about, okay, retail is gone. You know, brick and mortar is gone. And you know, I go in from personal level. We probably spend so much time now today, as of today, on a particular mall in town just because now you have the good restaurant, you have the good vibe. You kind of like, it's becoming more a hub for not just entertainment but spending time as well. And I think this is where the experience of retail is getting better and better, um, in my mind, at least for the mixed use project, right? It could be a little bit different for the QSR. um, and but this trend seems like, I mean, we see more and more coming in, and it seems like the trend coming in now for retail are definitely not going away, obviously. So I think this is the first 10 minutes of my life that I had so serious with you.
Yeah, it's been awkward for me too.
Yeah, it's pretty awkward, like, because I mean, when you mention things, you know, like I want to jump in and say stuff, and I just like I don't know, I don't like this serious, you and I. It's just like you know, it's
Yeah, most people that know me know it doesn't last very long. So we're gonna time out here shortly.
you know, one thing I want to go back to the challenge you have, especially when you mention performa. What do you think is the biggest friction right now you have on the process? Like all the way from early on till the projects start getting built. Where do you think is the most friction milestone, I guess, during the development?
I think it's still largely municipal and for us. So most of what I do now is buy existing buildings and convert them, whether that be reuse the building or maybe raise the building and reuse the site work. But in doing that and what we're going to do on that project, and we buy speculative as well, very fast deals, quick close. So we really have to analyze optionality. We want to know, you know, not what one tenant this works for so we can execute a build to suit. We need to know, hey, this likely works for this deal, but here's scenarios B, C, D, and E as well. And so that's where you better understand the municipal requirements and what things could trigger different requirements on your site. You better know your neighborhoods and have contacts with good zoning consultants who can tell you, you know, the council in this city is very difficult right now, and this type of use is a no-go, and that type of stuff can really change. And again, real specific to what we do, because we're typically buying spec in 30 days. And so we're not going to have a lengthy due diligence process where we get to go feel out the city. So we need to get our information fast, up front, and across several different options.
Yeah, and to your point, I think, you know, like, I mean, when you have a short BD, you want to have a quick answers to make sure, you know, like the project work or whatnot. You kind of like currently, when you come into a project on those 30 days due diligence, how much time you think you spend early on just figuring out what could be done there, and going through the land use attorney, going through staff? Is it big portion of this mainly coordinating with municipal?
Yeah, and it may not even be direct with the city. You know, we're fortunate enough to have relationships now where we can rely on different consultants for that information. Technology is really helping in that regard where we can do some research, but the bulk of our due diligence is that you know, the site due diligence, the environmental and surveys and, you know, reading CC&Rs, that's the basics. Like that's the easy part. It takes some time and it takes some money, and you got to get through it, but it's really understanding the optionality on your site. That's where we're spending the bulk of our time. And really, frankly, very rarely we're spending that with one specific tenant. Every now and then we might have a tenant in tow when we're going in, but we're still not going to buy that site with a signed lease. We don't have the time. So we're still going to be as thoughtful about the alternate scenarios in that case.
Fair enough. And you had, like, I mean, I know we talked a lot about the technology on the entitlement process and DD or whatnot, but I'm curious on the real estate side, Bill, have you seen any new technology on like performa or site assessment, or I'm talking more like real estate and more numbers in a way. Are you tapping to any other tools that kind of like investor maybe using, where it's like, okay, this is how we critiquing this performa, or this is how we're putting a factor on how this project risk is or whatnot? Have you seen anything like this? Have you been seeing any technologies that you really like?
Yeah, we're for sure implementing some technology and some AI on our underwriting. Um, I'm a big believer on that type of stuff. You better have a solid understanding of your numbers before you rely on that to produce your buy or no buy scenario. I think people are going real heavy on using that as a crutch, and I think it's a great tool and it can speed up analysis a lot. But you better, in my opinion, you better have a really good handle on what it's spitting out and know how to call BS on it sometimes. But for sure, we're using it. We can create pro formas that would have taken analysis, half a day to create on Excel. You can spit out in a minute now on Claude or some of the other more sophisticated spreadsheet type AI tools, and they're very helpful. It's time for us. We're dealing with short fuses. So anything that can help us get dialed in and down those roads, we're trying to implement them and find out what works best. Now, for what I do, we don't do hugely complicated underwriting. It's usually single or, maybe 2, 3 multi-tenant deals. But what we've seen out there is pretty powerful, and it's very helpful. And it can be things that you think of, again, that would have taken you a half a day to develop, where you can just have a conversational input with Claude and see what it pumps out, and then challenge some assumptions.
Yeah, I know. I know you have a lot going on. I will let you go, but just last thing, from your side, and what you do, and you do really, really well, Bill. What are the things that most exciting for you in the coming probably 2 to 5 years?
That's a tough question. It's what I really like about our business is the change is constant. And to do what we're doing, what excites me is, and why I started doing what I'm doing and how I do it, is being nimble and changing and adapting to the market. And that's exciting to me. And I think that's kind of what sets me and my partners apart from some of our competitors, is we have the ability to move really fast. We don't have committees. We know the markets that we operate in. We understand the risk. We're able to make very quick decisions. And to me, that's the exciting, the fun part of it. Because that change is constant, and being able to roll with that and get to work on completely different stuff, new things, new users, new opportunities all the time. There's some frustration that goes along with it, but it's pretty exciting. We're not creating widgets every day, working on the same thing. And I've done that before, where you're executing the same type of, build to suit development for the same user over and over. And there's excitement that goes that way too. But, and there's probably more excitement in it these days as it continues to evolve. But that's what excites me. I think that retail is here to stay. The consumers have proven it, and there's going to be ups and downs and changes, but that's fun to me.
Yeah, and I will say you build a unique development concept, honestly, Bill, especially with your reputation, your honesty, and what you have put together. It's pretty unique. This is not typical. I mean, I think like you bring a lot of trust into the deal you put together, and it's pretty awesome. And proud to call you a friend, man. I appreciate you. I appreciate you joining me here, and I I like if you have anything else to say, you can tell me. Is this after we have a cigar? I would hope you don't make fun of any of stuff we said today. And that's it.
No, I appreciate it. I feel the same way. And I don't know if you can see on your end, but before your next call, maybe go into hair and makeup. I'm getting a little glare.
Did you see? Oh, look at this.
Yeah, see, when you do that, I actually had to squint
My
a few
son
times.
doesn't want to even hug me.
So,
Like it was like it's insane.
you may want to spend an extra couple minutes in hair and makeup.
Dude, I was thinking about this. I swear to God, I was so pissed off during the interview. It's like I cannot believe this freaking guy has more hair than I am, because I see all the glare coming in, and I look at you. It's like how he has more hair. Just this is.
And I have to keep most of it off with the weed whacker every couple weeks. But yeah, it's thicker.
Yeah, but I mean, I thought about this for a second. It's like, well, I'm a lot more handsome, so it doesn't matter. So
Well, it equals out.
yes.
Good luck, buddy. I appreciate the time.
Thanks, dude. See you, man.
See you, man.